I thought we would start today with Greg on corn. So Greg, I will pass the floor to you.
Thank you, Chris. Of course, this is going to be the end of the marketing year for corn and soybeans. And in regards to corn, we have, the difference right now is that we don't have the type of tight stock situations that we've experienced over the past 3 years. I think the corn stocks number, as it comes out, the average trade guess is about 1.181 billion bushels. It's likely to come in near there. I don't think the corn stocks number is going to be the #1 candidate to introduce some sort of bone-jarring, seismic price movement in the market. But nevertheless, these corn stocks reports have a notorious reputation of surprising everyone. But what's going to mitigate this, or perhaps mute whatever surprise, if it happens to be bullish, and this applies to soybeans and perhaps wheat as well, as we have a large crop and the row crops coming on here in the United States, and I think the trade's focus is right on that. But nevertheless, we will get this market's going to provide, this report will provide a indication of what the magnitude of the offtake was during the fourth quarter. One of the elements a couple elements that are pretty much known are what the exports are and what ethanol production is. The caveat with ethanol production is the fact that it's a matter of efficiency. In other words, how many bushels does it take to create a gallon of ethanol? But given if we take past guidelines, it should be, the ethanol production number should be robust and meet USDA's target. Similarly, export inspections to date is pretty much known, and that also should either reach or potentially exceed. I think if there is a potential here for a bit of a surprise, maybe better exports, a little bit better exports, and a little bit more offtake or demand with the corn grind for ethanol, which would provide a lower stocks number. The wild card in this whole scenario for the report coming out Tuesday is going to be in the feed and residual category. There's simply been too much, the presence of too much erratic numbers coming out in that specific sector, feed and residual. So if we go back the past 3 years, 5 years, 7 years, you'll see feed and residual numbers jump around, and they could also, I would offer this, they may be better than what the trade expects, only because of the fact that you have a higher broiler population and dairy cows as well. And of course, we've kept weights up rather substantially on the hogs, and cattle as well have been running heavy weights. So going forward, we have to look at, this is going to be the end game. Whatever the number that comes out from USDA for grain stocks tomorrow is going to have to be incorporated in the October World Agricultural Supply Demand estimate, and it will be, in a sense, have meaning. However, once again, we are looking at a very burdensome supply in corn, both here in the United States and around the world. Maybe record production is in the offing around the world, coupled with a lot of record wheat production, much of which is in the feed category. So the corn market's going to have its work cut out for it coming in here. The big twist, October, WASDE report, NASS, that'll be, essentially if they change the acreage with the FSA, Farm Service Agency, with what actual certified acreage is. They'd have to drop it 2 million acres to make a difference in the corn market. So that's my read on the grain stocks tomorrow.
Great, thank you, Greg. Appreciate it. Jerry, I know we've asked you to speak a little bit about soybeans. Could be some potential interest in the numbers tomorrow. What are you seeing in terms of soybeans?
Soybeans always have lots of interest, Chris. Soybeans tomorrow, the trade's actually looking for a slight decline in their average estimate here at 126 versus the USDA's 130 number. All these numbers are really on the tight side situation here. We've had a very, very strong year of demand around the world, primarily led by the Chinese over the last 4 or 5 years, and no particular change in that this year. From there, we've had very strong basis levels out here in the both in the products and in the soybeans up until the last week or 10 days as we get right into the beginnings of harvest. But the interesting thing about the soybeans is that this year's particular crop estimate had a number, crop size that was not really high enough to match up with our demand numbers of crush and exports. And in that kind of case, the USDA had to come in with a negative residual, which is kind of unusual. It's something they have to do when this happens in the past because really on the soybean side, because of the fact that crush and exports and really a small little bit of extra demand that might be used in food or something, those numbers need to match up with our total ending stocks. Corn, you have the residual incorporated into the feed demand, and so in turn, this case, they really have to make the adjustment in last year's crop when they had already 2 or 3 months ago came in with a 99 million adjustment, 94 to 99 million on the residual. I kind of feel like the last year's crop was probably closer to 105 maybe million underestimate of that scenario, and that's because of about 1 million acres more planted soybeans than what the USDA had on their final number last year. And also, to get to that level, you need a 0.8 of a bushel increase in the crop size. So put that all together and then look at the expanded demand that we have and some last minute adjustments in that between maybe a little bit less on crush, a little bit more on exports. I'm looking for a 136 number. Is 136 exciting against 126? Nah, not really. It's still a very small number. Unless we can get a number that pushes up above 150, and even then, that's going to have a very short-term kind of impact. The market's really been very concentrated on this year's yield responses that's come from the country. We've had excellent yield numbers coming out of the Delta. Some of them, pretty strange, or it's not strange, but pretty impressive to say the least, of 80 and 90 bushel yields out of the Delta. And then the Eastern Corn Belt. The interesting thing about that is that from a standpoint of the crop size here, we're 50% of the crop is actually raised west of the Mississippi. Only about 29–30% of the beans are raised east of the Mississippi in the Eastern Corn Belt, and maybe 12% in the Delta. So in reality, as we're hearing our best yield potential this right now, that could be quite an interesting factor as we work through this harvest. Harvest is just getting started. We only had 3% last week. I think we might be going to 9 or 10. Next week is really going to be probably the more important number to see how far we can push along. A little bit of rain in front of us. But right now at this point, the soybean market is really going to watch this stock report, but it's really going to be concentrating on what kind of potential yields we're starting to hear in Eastern Corn Belt and the Western Corn Belt over the next 10 days as we go into the October 10th report. And that will be the big feature here as we look towards the 2014-15 crop year. That's all I have.
Great. Thank you, Jerry. Ken, we have the small grain stocks report tomorrow. Interesting for wheat. A lot to cover. So we'll have you dive right into your thoughts for wheat.
I want to thank the CME group for inviting me down here. And like Chris said, we'll have the quarterly stocks for wheat as well as 2014 U.S. wheat production estimates. So it's twofold, and first for the stocks, the trade is looking for 1.88 billion bushels, which is up just 10 million from a year ago. I don't think the market is as worried about the stocks report for wheat as maybe the production results that we get tomorrow. And I think that wheat might be more of a follower regardless of maybe what corn does, except there could be some class-by-class changes in the wheat production, which could impact the intermarket spreads between Chicago wheat and Kansas City wheat in Minneapolis. So We'll dive into what the market's looking for production. All wheat at 2.037, which is just up 7 from August. Kansas City wheat, or your hard red winter wheat, is estimated at 729 million. That's just down 1 million from August. Soft red winter wheat, Chicago wheat at 465, which is down 1 million. And then Minneapolis spring wheat, or other spring wheats, estimated at 580 million bushels, which is up 8 million from the August estimate. So we're still in the process of harvesting some of the U.S. spring wheat crop. Expectations, fairly good crop, to be quite honest. I think the market at this point, the estimates for the Kansas City and Chicago wheat crops are, they're in line with what the market thinking is. I think at the moment, Chicago wheat is fairly cheap versus world levels. We just recently won Egypt business. Kansas City wheat just did some Nigeria business. I think longer term, maybe to close out the year and over the next couple months, we're going to have the South American and Australian harvests coming up. Both of those are going to be hard wheat crops. So I think if there's a wheat class that the trade needs to pay attention to, it's probably Kansas City. We've gotten good rain in the Western Plains over the last month and a half. Kansas City wheat's fairly expensive to Minneapolis and Chicago as well, and to other exporters around the world. So I think if you were to see, an uptick in the Minneapolis production and, a kind of an even number on the KC side, you might see spreads like the Kansas City December wheat and Chicago December wheat narrow up a little bit. It's been trading between 83 and 85 the last week or so. It's fairly pricey, fairly rich from a historical perspective. So traders should probably keep an eye on those intermarket spreads tomorrow. And then I look for the flat price market to be more of a follower to corn, but you got to keep in mind that the fund community is near a record short. So some short covering certainly can't be ruled out as well. So thank you.